Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX. And as always, we'll start with the North American markets. Investors were cautious yesterday ahead of what many expect to be a volatile session today. US housing starts rose 0.2% in July to the highest annual rate since October 2007. But the dollar shrugged off the strong reading just as it ignored a weak reading from the Empire State Manufacturing Index on Monday. A reading on U.S. consumer price inflation in July is expected today, along with minutes from the July meeting of Federal Reserve policymakers. In Europe, meanwhile, investors are anxious to see whether the German parliament will support a third bailout package for Greece. The Dow Jones was sideways, the Nasdaq was 22 points down, and the Dixie was down to 96.80 from 96.97. There was sideways movements in the currency pairs. In the EU markets, Austria's parliament voted on Tuesday in favor of an 86 billion euro bailout for Greece to prevent the debt-ridden country from tumbling out of the Eurozone. Parliament's permanent ESM subcommittee approved the measure, a finance ministry spokeswoman said yesterday, and assuming approval by Eurozone parliaments, 13 billion euros should be in Athens on Thursday to pay pressing bills, and a further 10 billion will be set aside at the European Stability Mechanism, earmarked to bolster Greek banks' capital. Germany's parliament is expected to give crucial approval to the bailout today. The DAX 30 was 68 points down, while the CAC 40 was sideways. Onto the UK markets. Annual inflation in the UK rose slightly in July, but remains close to zero, cementing expectations that the Bank of England is unlikely to raise interest rates until early next year. Consumer prices rose by just 0.1% on the year in July, largely due to a smaller fall in clothing prices in this year's summer sales than in 2014. Airfares rose on the year, offsetting a decline in food prices, the ONS said. The FTSE 100 fell 0.4% to close at 6,526 and dipped to intraday lows after yesterday's news. No events for today from the UK, so we'll move on to the Asian markets. Japan's latest economic data signals the growing reach of a slowdown in China, which accounts for about a fifth of Japan's exports and imports. On Wednesday, Japan reported a monthly deficit in July of 268.1 billion yen, the fourth straight month of shortfall after export rose 7.6% on year, but imports fell 3.2%, mainly due to falling oil prices. The Nikkei is also down by 210 points and 86 points down today. The Australian and New Zealand dollars declined against their major peers as stocks tumbled for a second day in China, the biggest trading partner of both South Pacific nations. The currencies declined toward 6-year lows as risks to Chinese growth raised concern the central banks of Australia and New Zealand could be forced to continue to reduce interest rates. No events for today as well from Asia. In commodities, oil prices edged up a little bit on Tuesday after the release of bullish US economic data and as traders placed bets on the prospect of falling crude stockpiles. Any recovery in crude oil prices from a 6-year low may be short-lived, however, with the US entering the slow demand period in September. As we know, output is quite high. Gold ended sideways Friday at 1124 now. Silver went down 43 cents and is now at 14.96. Crude rose by $1 at 42.87, and natural gas ended 1 cent down to 2.69. Thank you, everybody. This was today's European Session Outlook. I'll see you next time. Goodbye.